Hey, good morning, everybody. Happy Friday, May 16th. It is the monthly option expiry. Yeah, about an hour ahead of the market open. Let's talk about a little bit of GameStop. I know I saw it was like the sentiment and mixed reaction yesterday morning. We'll pull up the chart here. We'll take a look at some of the flow. I know everybody was like, oh, this, I had said earlier in the week, look for some of these, price levels, price where the stock has been before, for example, on the 12th, early, to start off the week, Monday, the low 27 29 there, and then the low yesterday on Thursday 27.42. And I had posted too about the 9 day moving average. Kind of watch these. This was the 9 EMA right there. You had the 21 EMA. We did see that golden cross of the 50 crossing over the 200 last week. So I know a lot of people got excited about that. Kind of a bullish move in that regard. The stock on May 6th, that low of 25.66, and then kind of bounced back up here, right into that area we are in the gap up from the earnings. So yeah, I mean the stock's healthy in that regard. So everybody's like, it's like a chance to flush your calls or flush your puts. And I had just talked about this during the live we did Wednesday. We were talking about like, hey, last year's prepared you for this. You see a lot of people like, hey, they got excited, and they had when the calls were at $29 here. Let me pull this out a little bit here. So we go to on Wednesday, or pardon me, yeah, Wednesday. Let's see what's today, 16th. Yeah. Okay, so that's when we had the high 29 Wednesday morning there. And then Thursday a little bit of a fade down, but then move up, earlier in the week. And then I was just telling people, hey, you see it all the time. People are like, yeah, I should have sold my calls up there, and then it went down. I know, especially with short term and with volatility, you're gonna lose that move. So you got flushed out here. Then you try to maybe panic, and alter your position, and then frustrated, and then boom, then the move came later in the day, which was interesting because after it flushed out yesterday, if we look at the option flow, so here was yesterday. We had the open and then a push down, and some of the calls, that being sold off, traders taking profit, just to essentially come back, and only close a few cents down. What closed 10 cents a dime, closed 10 cents down from the day before. So if you look at the flow during the day, price went down. The calls, people panicked, they left, profits being taken, calls being sold. A little bit of a spike in put premium here, as traders probably thought, okay, maybe there's some more downside with the stock. Stocks start to move back up, put premium remained flat, and then the net call premium never really did move. It did make a little bit of a move back up towards the end of the day, and we'll take a look at that. So it's pretty light. It was about 28 mil total premium for the day on Thursday. Pretty light in that regard. But yeah, pretty incredible price recovery there. But stocks move up, they move down. They look for their moving averages. So if we go to like the 4 hour, let's just go to the 4 hour chart. We'll turn on like the MACD and the RSI. Granted, those are lagging indicators, but just so we get a glimpse there how that played out. Still gliding, very nice. Like, see, we've got a shorter time frame here. You've got your 50 crossing over the 200, even on the 4 hour. So that's similar to what you saw with the golden cross. So it's kind of bullish in that regard. And then yesterday, when the stock went to 27.42, was right above that EMA, 21 EMA of 27.60. So look for these. Look for these EMAs on your chart. Look for previous price. Look for that as your areas of support. Maybe you want to buy calls and wait for those areas. If you see a drop, wait for those areas. See if they hold as if they've done in the past, and then use that. Use the flow to kind of help guide your decision in that regard. So let's look at the flow. Before I do that, also all of the videos here on X, we had did that poll where I'd asked, hey, should the videos be here? Would you also like to see them on YouTube? I have rebranded one of my old YouTube channels, so I didn't mean to cause any confusion. I know some of the old people that when I made vlogs like 10, 15 years ago on YouTube, they were like, hey, where'd all those video goes? They're still there. They're just unlisted. I didn't want to like murky the waters, but at the same time, I was not going to just start another new YouTube channel because I've got quite a few of them. So yeah, I've put all the videos there so you guys can go check that out. Wolf of My Street X there on YouTube as well. All the videos are there. I know it's one of my rebranded channels, so yes, that's why there's 54,000 subscribers. It's not like 54,000 people subscribed overnight or anything. But just wanted to highlight that is there. So please go check that out as well. I would appreciate that. YouTube.com at Wolf of My Street X. So you can find that there or by my name, Ryan. So, yeah, let's jump back over here to the flow and take a look at it. See kind of how that broke down for Thursday because it is the monthly option expiry. So any big move today, they're going to roll anything to like the June monthly OPEX. Things we've been talking about since last year on all the videos, all the posts. So let's take a look at that. Some of the highest volume contracts yesterday here. We'll give you a little bit of zoom action there. You can pause or take a screenshot, record, do what you need to do. Highest volumes usually, and this is week in, week outs on the short dated calls. You see that all the time. It's for the 30s, the 28s, and the 29s all expiring today. Those 2750s, we'll talk about those 2750 puts because we did highlight those earlier in the week where we saw the buyer come in. They more than likely got their move yesterday and made their money, and we'll take a look at that as well. So we'll take a look at some of those top ones. Take a look at where some of the money was actually spent on those. But let's look at those 2750 puts from Thursday. Kind of see how that's played out a little bit over the last few days. And as I expected, the open interest did decrease this morning. So that was one of the things you always look for with options, especially with flow. You might see the big move, but you got to look for the open interest changes just to confirm the move, see if the move has changed in that regard. So yes, this is where we had talked about it. On the 12th, we saw some of those puts coming in for the 2750 puts for this week, right? So I first started reporting those on Monday. The traders were coming in, paying about $60 a put contract in that regard. Looked like, maybe some sold here on the 13th and 14th, as well as some added. Now, another bigger, not bigger, but on the 14th then, some more added at 15, and then probably more than likely just sold there at 21. My guess is this was the exact same trader here. Let's see, more on the 14th. The open interest carried over and then sold them yesterday. And open interest changed hands, decreased, etc. as the contracts traded hands. So more than likely same particular trader right here. And we can use kind of our time frames and look at the larger candles. That's what I'll do with unusual whales. So more than likely jumped in here at 14 and then left the next day at 22. Not bad. Not bad. About a 50% move on the short dated. Played the volatility as it spiked. So, yeah, not too bad. That's what happened at those 2750 puts. And then the 28 calls, which went back into the money. I know for the people that got faded out, that's why you got to be patient. If you're up here earlier in the week when I said, hey, take your gains on your short dated contracts because of volatility, because out of the money. No, you didn't, and then now you got faded down here, and then you're mad they came back. That's what I try to do the videos for and the posts, just to try to help mitigate that risk for you. You want to look for those opportunities. So, for example, if you were on a 15-minute chart yesterday, I'm not saying this would have held true, but look for your longer time frame, which is like the 200 SMA. So at the time when GameStop went down yesterday, 27.42, that SMA was at 27.27. That's what I would have looked for. So if it gone down there, would it go lower? There was your opportunity. So therefore, from 27.42 to 28.60, there's your dollar plus move. So that would have paid money on options contract. So conversely, people take profits, etc. So let's look at those 28s as well. That came through on Thursday. About 15,000 volume, 700,000 in premium. About 2,000 appeared new open interest. So short dated, they're in the money, but you can see the rally. I saw these coming in on unusual whales yesterday, around $30 a contract, and they closed at 70. So traders doubled their money buying the dip on short dated, just at the money calls. So that's always exciting. Love to see people making some money, especially on short dated. You always got to be careful. The volatility and risk is there. But like the $29 calls as well. Similar scenario, about a couple hundred grand in premium. Now on Wednesday, there was about 2 million in premium. You saw 40,000 in volume, but only 1,000 in open interest. So you're like, well, what actually happened there? Contracts traded hands, positions closed, and scalping. Trade during the day, closed in the same day. The open interest isn't going to change in that regard. And then so the volume yesterday, 9,700, and then 1,900 appeared new open interest. So the OI is sitting about 14,000. And those are just slightly out of the money as GameStop at time of recording. Ahead of the market this morning is at 28.62. So even those moved a little bit. 13 up to 26. So they did double. Again, out of the money, short dated with high IV. You got to be careful out there. So you know the drill. You know how this works with GameStop. And then the 30s, which were out of the money as well. You did see some of that activity come through, about 400,000 in premium yesterday. Now, some of that picked back up here into the close. Could have been some traders buying back their calls they had sold to close them, some buying new calls. Because they had about 40,000 in volume, only about 9,000 in new open interest. So there is 30 calls for the May OPEX, which are just slightly out of the money. GameStop's 28.62. And those moved a little bit from $8 up to 14, but yeah, out of the money with today's expiry. And the IV yesterday was 90%. You got to be careful. If you're not on the right side of that, you're going to get cooked every single time. And don't be mad. Just learn from it. And, send me a DM. Reply to these videos. Engage with me. I can help you navigate those problems. I've seen it so many times. And it's avoidable. Usually it's just a decision being made by yourself. And we can fix that. We can help. We can help you help us fix that. So, same with these 2850 calls, which are right there at the money. About 8,000 volume yesterday, about 220,000 in premium. A little bit of new open interest, but again, guys, it's just buyers and sellers trading back and forth, back and forth. Filling a low at 17, then up to 40, so they doubled their money. So yeah, I mean, you can do that. You just got to be careful. You got to understand your risk, especially if you're trading the name. But you know that already. So let's take a look at where the bulk of the money was actually spent. It wasn't a whole lot yesterday on GameStop, but we'll take a look at like where was the top contracts being spent, the bulk of the cash. I always like to sort that for us together during the video. So we can take a look at more of those 125 puts. Ooh, spicy. And I've talked about this before. In fact, I shared a video not too long ago just about those puts and what they mean. It was on the $85 puts. It's the same thing with the 125s. Why you would sell deep in the money puts. I covered that. I'm going to go ahead and repost it right now because I think it's a good time just to refresh for those that may not remember or didn't get a chance to check it. Yeah, 18 mil and $95 puts. Let's break down the math. I'm going to go ahead and repost that video. And the only reason I'm doing that right now is because of what's appeared there this morning. Not appeared this morning, but what we're going to look at now. So let me see. We repost that. That'd be weird sometimes. I swear X on desktop is very bizarre sometimes. But the 125 puts, the same concept. We've seen this before. I've explained the math, how that works. It's deep in the money. If you take the difference of 125 minus 97.44, it's going to be roughly your current share price. Alternatively, if you take the strike price, 125, minus the current share price, will be roughly the premium paid. So about 6 mil in premium yesterday. Let's see, 604 volume, 300 appeared new open interest. So let's see. Selling and buying. And I explained the why. You can use a short in the money put for a couple different reasons. But like I said, I shared it about the 125s as well. Let's see here. Here's a good explanation. Just related to arbitrage. I broke down the math for you. Let's see if we can repost that here. And then give it a repost. There we go. We reposted that. So that'll be available as well. Just a good refresher so you don't get confused or you see the misinformation. Because it's all the time. I feel like some people just bought an Unusual Whales subscription. They have no clue what they're talking about. They post to X just to get a few likes and to make $20 a week. And their X revenue and completely not helping at all. But hey, to each their own. Let's see, the 30 calls, which for the June OPEX, June 20th, saw activity as well. About 6,500 volume, about 1.3 mil premium. a little more heavy on that sell side yesterday. So I'd assume maybe some traders selling those calls, maybe exiting position because next month is the June expiry. We're now at the May expiry. With the downside move in the stock yesterday, traders might have just wanted to take their money. Some could be selling them to open, some could be selling them to close, buying to open, buying to close, many different ways. So, for example, if you didn't think GameStop would close above 30 next month, you could sell those and collect the premium. Or if you think GameStop's going to be at 30 or above, you could buy the dip and you thought you would make some profit on the contracts. For example, so when some of those were being maybe sold off yesterday at to around $200 each, they pop back up to 240. So if you sold them here, maybe you had to buy them back. Maybe just sold because you didn't want the downside. Maybe you thought there was further downside coming, so you sold them. Could have been a hedge against your position as well. So always a few different scenarios in that regard. But that's where the bulk of it was. There's some in the money calls there. Same type of scenario with why you would want to do that. It's deep in the money. Could be a way to build a position in that regard. Exit a position many different ways. Why you would do that. And then the $25 calls for January also, I think was a little bit. Yeah, there was some volume there yesterday, about 750,000 premium. A little bit of increase to open interest. So these are in the money calls for January. And for example, just because you bought them, I mean, you could have been assigned. You could have assigned yourself. You could have exercised. Not that you would, but you could. I don't know why you would. Only because the premium's so high, it wouldn't make sense. But it could be a hedge against something else, with your common stock or, a put position. So yeah, that was where the bulk of the money was spent. You can take a look here at the strikes and expiries, on your own. I didn't see anything too outlandish in that regard. Nothing that was like super directional. That was like, hey, take a look at this. Let's look at these 35s for June. So it was about half a mil yesterday. There's been a little bit of volume the last few days. I know some people sold some, I believe. I feel like on the earlier in the week. Let me look at that here. Yeah, it looked like a pretty good block being sold off there at around 140 a contract, and they kind of bounced back. So, particular trader might have bought some back here as well. I'm not sure. And those are just out of the money. But yeah, I mean, it's just activity, random chains. We see it all the time. But let's look at the open interest. Let's look at what changed this morning in regard to GameStop. Take a look at our largest changes here. Getting our lovely data updated. See, it was the 30s for today. It was the largest increase to open interest. 125s for June. I've talked about this. There's some traders that think GameStop might go to 125 by June, so they're buying calls. But the reality is, a lot of people are just selling these calls on the idea GameStop won't go to 125 next month, and they expire worthless, and they can just keep the premium. It's not a bad idea. I mean, the IV is 200%. So they're 330% out of the money. Now, I mean, if GameStop squeezed to 125, sure, that's a different scenario. But the stock's $28. So you're asking for it to go up $100 in value. That would put, another 50 billion in market cap. Let's think about that for a second. Okay. Let's be realistic. Doesn't mean it can't happen. There's just not a lot of short interest on the stock, so it's not the same type of scenarios you've seen in the past. In the past with short interest, FOMO, volume, and call buying. Last year was Roaring Kitty was FOMO, call buying, option exercising, putting some pressure on market makers. This year it's just GameStop's got cash, stocks being traded. Wall Street's established the floor around $28 on the stock. It seems like you got the convertible notes, you got the arbitrage still occurring out there. So yeah, but there's your biggest changes to increases to open interest. Let's look at the decreases to open interest. 25 puts for May. I think those were the ones sold off, and then those 27.5 puts. The same thing like we talked about. We saw those puts come in earlier in the week, and then traders made their money and dipped. So here's your 15-minute chart. That was your little dip yesterday. And the dip on the 15th was same over here. Same at the 12th. They loaded, went to 29. Everybody's like, yeah, didn't sell their calls up here. Not everyone, but some people. I see it. They buy here. They're like, my calls are up. Yeah, yeah, yeah. Oh, my calls are really up. They're like, yeah, yeah, yeah. They're going to, stock's going to go to 50. My calls will triple. Then they get so upset over here. It's risk management. Why let that move escape? Because especially on a short dated call, it's not going to come back because of volatility. Reason is 29.39 down there to the low. It's 7% $2 move. That's not coming back on short dated. It just will not. So you have to be careful. Now, oops, I just cloned that. But here yesterday you bought, then they came back. So, the market makers shake you out. I don't know. That's some people have without the right understanding, they place a lot of blame, on Wall Street or the market or this or shorts or that or none of that matters. What matters is just look at the chart, look at the flow, look where the price has been, have realistic expectations. So, for example, when the week started off here, we had Friday over the weekend, then boom, we come back from Monday. People are loaded right here on EMAs. That's a good opportunity at 27 and then up to 29. Couple dollar move, good move on the contracts. And then there's going to obviously be a little bit of retracement and then move back up. So, for example, even if we use just a generic Fibonacci series, okay? Use a generic Fibonacci cycle. The stock retraced. So here's the full cycle. Stock retraced to the 382, come down, and then came back to the 382. Now that's on a 15-minute, so that's a shorter. So you want to see it on a longer time frame. Mind you, this is auto Fibonacci. I'm not doing this. I use Trend Spider for my charts, so even on your 4 hour, incredible. Blown out, well over. Let's look at the daily here. Get it complicated too much. And let's refresh that all the way. Because I hadn't done a Fibonacci since October on the daily. So I haven't adjusted my fibs on GameStop since October. That shows you how much I'm not really looking at the day to day. I mean, the stock compared to where it was at a year ago. That's all that needs to be said. I've said it 100 times. Here's where you're at a year ago. I know before the squeeze, but think about when the stock was $15. Think about when it was $10. It's 28. But I know everybody's like, but I got bagged over here. I bought up here. I know. Have you sold covered calls all the way down to try to recapture some of that income? No. Because you're like, calls don't work. Market makers this, market makers that. They're going to steal your premium. No. The premium gets stolen on options because folks simply don't necessarily know what they're doing. So it's avoidable, and I'm here to help. And I love to help, and there's plenty of other people here to help as well. But yeah, daily fib level. Wow. So retracement here, 618 is usually the number people look for, or a half, retracement. So here's your 618. So from your low on your Fibonacci on March 31st of 2073 to this high on May 1st of 2835. Not a bad move, by the way. Your first retracement, then back down of 2566 on May 6th, just above that 618 level. Then you have the golden cross right around the 786 fib and your other EMAs. Now you're right here. These little candles. So had a higher highs, series of higher highs. And then a lower low here. So we'll see. With the OPEX today, just watch the flow, watch the volume. The chart's like the navigation. The flow is really what tells us what's going on. The chart kind of will help align the thesis of what's going on. And then the other way to kind of symbolically look at the data, or at least to look at, pricing in that regard. A good way to look for what I look for in like a dart pool not so much volume and everything gets excited because that even that information on the GameStop dark pools all seems to be a lot of misinformation online. Just remember, you can't have a buyer without a seller, and you can't have a seller without a buyer. So, regardless of what transactions you see occurring in the dark pool, whether it's millions of shares for millions of dollars worth of premium, I see the same people sharing the same worthless posts all the time. And I hate to sound that way, but they're not doing anything for anybody except juicing their X account for just fake clout. But real people know like that doesn't do anything or help anybody. But you look for it for price level. So yesterday on the 16th, they didn't have any problems filling in the extended hour trade yesterday morning at 28.70 or 28.65. Traders didn't have a problem paying on the 15th 28.69, 28.59, 28.59. And some of these larger orders, this particular trader didn't mind buying or selling at 28.60. So Wall Street may feel that's what the value of that stock is. 28.58. Good levels to watch. Why? The stock's currently at 28.61 as we record. So, if you don't think that dark pools matter for price, yes, they do for price reference. A lot of stock is traded off exchange. It's not just GameStop. Okay, what did Gary Gensler say? If back in 21 or 22, he said 90% or something of retail trades were all off exchange anyway. It didn't matter what the ticker was. So, yeah, I look at it for price levels. 2858 is a number. There's some 5,000 blocks in the dark pool as well, but 2850, 2847, 2841, which is all kind of around those EMAs. So if you look at your daily EMAs over here, daily moving averages 2784, 2714. So it's similar to around those off exchange prices. So, yeah, that's what I got for you. It's Friday. It is the morning. Like I said, videos are also available on YouTube. So if you want to watch them there, you can. If not, no worries. They'll still be here on X. They're available for both. So make sure you go back and check out the puts, the data on that, because I'm sure there'll be some misinformation going around. Send me a DM if you would like some help. Um, yeah, I know some people that send some DMs like, hey, you got that subscribe on X. What all do you do there? It's $5. I mean, what do you mean? What do I do? I share different ideas, different trades, different flow alerts, but $5 a month. No offense, I can't trade your book for you. I'm not just gonna call out bangers and like that's that. So, but I also have something else I've been working on, the Wolf Den, more of a private thing. So it's something to be. If someone's interested, let me know. I could maybe give you a preview to that as it's operational now. It does come with a cost, so if that's something you're interested in, it's more like education, mentorship, live trading, live commentating, live market analysis. Like, for example, hey, we're looking at this trade. I can pull up live option flow. We can talk about it together, talk about the risk management, talk about if it's a good or a bad idea. And then we could possibly execute that together. So some of the things I've been doing privately, just some mentorship, just helping empower other retail traders. But yeah, if you enjoy the video, you're awesome. Happy Friday. And I'll see you lurking around the internet. But yeah, just be watchful. Be mindful of the flow today. Probably be a lot of noise just because it's monthly option expiry. I know the bulls and the bulls and the bears. It would be an interesting level on SPY at 590. A lot of gamma at that 5900 level on SPX. So we'll see here. SPY at 595 would get spicy. See a SPY at 590. I'm not sure. Not to take a look at. Just watch the rest of the market. You do have consumer sentiment, Michigan consumer sentiment coming out in an hour and a half. So be careful. You know how that goes. When the Michigan sentiment drops, that could go either way, especially on a Friday. Option expiry monthly. But yeah, be careful. And y'all have a fabulous day and enjoy your weekend.